Welcome to Correct Your Tax Withholding Training. In this video, you will learn how to properly use the Internal Revenue Service's Tax Withholding Estimator so that you can properly estimate the correct amount of taxes to withhold from your paycheck. The first step is to go to Google and search for IRS Withholding Calculator. The first result should come from the IRS website. The page is titled Tax Withholding Estimator. Click this link. You are now taken to the Tax Withholding Estimator explanation page. This page explains how the estimator works and what you need to complete the calculation. Scroll down and click the blue button titled Tax Withholding Estimator. There are 6 sections of the estimator. Section 1. About You. Section 2, Income and Withholding. Section 3, Adjustments. Section 4, Deductions. Section 5, Tax Credits. And Section 6, Results. Scroll below to answer questions in Section 1, About You. The first question asks what filing status will you use for your tax return. If at any time you are unsure about what the question is asking, there are blue circled question marks beside each question that will give a more clarifying explanation. In this scenario, the person, John Kane, is filing head of household. The next question asks, do you or will you have a job or a pension that regularly withholds federal income taxes from your paychecks or pension payments? John answers yes. John is then presented with 4 questions and asked to select all that apply to him. John is a single parent and plans to claim dependents on his tax return, so John checks the first box. John clicks Next. John is now taken to Section 2, Income and Withholding. John is asked, how many jobs will you have this year in which federal income tax is regularly withheld? Include this year's past, present, and expected future jobs. John only has one job, so he leaves the answer, 1. Next, John is asked to describe this source of income. John selects salary. Another question appears and asks, what best describes when you earn income from this job? Since John has been working there since the beginning of the year, John answers, all year. The next question asks, how frequently are you paid? John is paid every 2 weeks. The next set of questions require John to have his most recent pay stub. When did your most recent pay period end? John looks at his pay stub and it shows April 14, 2024. What was your most recent pay date? John's pay stub shows April 20, 2024. Enter wages or salary per pay period. John's gross wages, before taxes, are $2,800. Enter wages, or salary year-to-date. John enters his year-to-date gross earnings at $22,400. Based on the information provided, it looks like your expected annual income from this job is $72,800. Is this correct? John answers, yes. Next, John enters his federal taxes paid per pay period as $302.19. He also enters $2,417.52 as his federal taxes paid year to date. The estimator asks John to select any other situations that apply to this job. There are none. John selects none of the above. The estimator asks about other sources of income. John has none, so he checks the none of the above box. Finally, John does not have any withholding from other sources of income or estimated tax payments. He leaves both boxes blank and clicks Next. John is now taken to Section 3, Adjustments. John reviews the different options for adjustments to income. Since he has none, John leaves all the boxes unchecked. John clicks Next. John is taken to Section 4, Deductions. John is asked if he plans to take the standard deduction or if he will take the itemized deductions. John knows he does not have enough itemized deductions to equal more than the standard deduction, so he answers no, just use the standard deduction. John clicks Next. John is taken to Section 5, Tax Credits. How old will you be on January 1st of next year? John answers 32. John is asked to enter the age for each dependent he wishes to claim. John has 2 children ages 11 and 12 that he claims. John enters 11 for one child. John clicks Add Another Child and enters 12. The estimator asks John if he has child or dependent care credit. John does not, so he leaves the box at 0. John has no qualifying work-related childcare expenses, so he leaves the box blank. John enters the number 2 for earned income tax credit. John does not have any adoption tax credit, so he leaves this box blank. John does not qualify for any other tax credits. He scrolls to the bottom of the page and clicks Next. John is taken to Section 6, Results. John discovers his expected tax withholding for the year will be $7,853. However, his anticipated tax obligation is only $1,780, which is $6,073 in overpayment. His projected refund from the IRS will be $6,073. John is currently living paycheck to paycheck and could use the money he is overpaying in taxes. With 8 months left in the year, John could see a monthly paycheck increase of approximately $759 per month. John decides to change his Form W-4 so that he can use his money now instead of waiting for a refund. Scrolling down the page, the estimator gives John instructions on how to adjust his Form W-4. However, the IRS has done John a favor by presenting him with a pre-filled Form W-4 that already has the numbers needed. John simply needs to download this form, complete his personal contact information, sign and date, and present it to his employer.